Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 22nd. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement in your portfolios, but please do that in your own way. And remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Starting to ramp up the economic data for this week anyway. We got a little bit coming out here in the United States, not so much across the pond. We did get some from Canada, but who cares about Canada? Anyway, we got existing home sales coming in at 534 million units, expected to be 540 million units. That's a little bit lower than expected. Crude oil inventories, though, came in at a drawdown of 5.8 million barrels, expected to be a drawdown of 1.6 million barrels. So 4 million barrels lower than expected, or more of a draw than what was expected. That is bullish for crude oil, generally speaking, which it is today, obviously, with the market up, as you can see here in crude oil. And obviously a product of demand and supply diminishing. Also, later on today, keep your eyes out for the FOMC minutes. I don't know that there's going to be a whole lot of market-moving information coming out of there. We pretty much have heard all of the Fed governors speak since the FOMC meeting, so we generally have a really good idea of what they said already. So it's really hindsight for the most part, but people want to dig into those minutes to try and figure out what words they've dropped. All right, so on to gold futures. Gold up another $2.50. You know, I put on that gold trade yesterday. It was looking a little toppy. Today, or late in the day, I should say, after the equities started taking a tumble, this started pushing higher. Today, we are higher on the day, but not near the highs of the day. Probably right there, middle of the road, actually. All right, we've got the bonds slightly in positive territory, up 11 ticks, not even quite half of a point. Really, it's just a product of flight to safety globally for the most part. This pattern, though, one thing to note, could start looking like it is a continuation pattern. Now, this kind of set up before the trade that I put on, but we'll talk about that here in a minute. I think that it's kind of gotten a little overdone to the upside in the bonds. All right, now the VIX is slightly higher on the day, or actually, no, now it's negative on the day. It was a little bit higher earlier this morning, but now we're back into negative territory with the equities, is what I was going to say. Excuse me. The equities in negative territory pushing the VIX higher, but it's starting to get a little bit quiet there over in the VIX. The Dow Jones Industrial Average off by about 11 points right now. Still above that Fibonacci level that we talked about, that's showing as a very strong support area, of which the NASDAQ, being up 30 some odd points, can't get through this 61 Fibonacci level. Now, usually that's where people start to cover their shorts or cover their longs, start shorting and things of that nature. When it reaches these levels, that's going to exacerbate the difficulty of getting through this 61 Fib level. Tested it yesterday, failed on it, especially late in the day. We're trying to test that right now, heading up there. But like I spoke about yesterday, we need a settlement, if you're a bull, above 74.50 in order for the bulls to really gain control on this. E-mini S&Ps moving higher yesterday, making late day sell-off. I mean, last probably hour or so, market really took a tank. Starting to retrace that now, trying to push higher, but yesterday's settlement really made this look very toppy. Day's not over yet, but not looking like it is going to get confirmed today. This is what I was talking about. Basically, all afternoon, the market just selling off right to the lows of the day, even extending that sell-off into the after-hour session. Today, overnight inventory is getting long, and no real attempt to flush that out as of right now, near the highs of the day. Starting to get one of our first real red bars for the most part, as the market probably looking to cover a little bit right now at yesterday's point of control. That's what people will trade off of this market profile on that previous day's point of control when it trades up to that magnet. It's a smaller magnet than what we see on the big chart here, but those little points of control are definitely little areas that the market wants to migrate to. All right, on to TLT, the trade that I put on. Like I said, I'm bearish in TLT. Interest rates are going to likely continue to rise before they start to fall anyway. We may even take a pause. If we take a pause, I am bearish to neutral in TLT, especially at these levels. So I went in with this really low implied volatility. What do? We need to look to buy options. So I went into the October and I bought the 121 puts in there for $1.50. So I'm looking for this market to roll over, obviously, come back down to the point of control where I think the most time, or where I think the value price discovery has happened. That's really where I think that they should be hanging out right now with all of the economic data out, the FOMC, their mandate. It really doesn't have room to move to the upside at this point unless something disastrous happens. So playing TLT to the downside. I haven't covered any other trades. Most of them are working out pretty nicely today with Google moving higher, Netflix moving higher, all of those things. My calendar in Netflix, my short puts in Google, Tesla working out a little bit better. I was able to get those extra half tranche on my 390 calls late in the day, so I added a little bit to Google to the added a little bit to Netflix on the short call side. So looking for that to roll over a little bit more as well. I said Netflix. That is all Tesla. Adding Tesla short calls to my portfolio yesterday. Remember, on today's Wednesday, so Monday, I sold some calls in Tesla. We got a bit of a bounce. I added a little bit more to that Tesla 390 calls that I talked about yesterday. I was working in order. It had gotten away from me late in the day. I got hit on those. All right, that's about it for today. Other than tomorrow, we're going to be doing the webinar on a straddle with no upside risk. I'll show you how to build that out, all the rules in and around how we set a trade up like that to increase your probabilities of success. All right, so that's about it. Other than if you can't take that, take it easy.